Welcome to the Lunch Hour with Mr. Credit.
It's the big guy. Get in here.
And today, it's Wise Wednesday.
You're so wise. You're like a miniature Buddha covered in hair.
Giving you the smartest financial advice in every aspect of your financial life.
You're so money you don't even know it.
And now, the Lunch Hour with Mr. Credit on ESPN Radio 1700.
Hey, it's your tomorrow.
Welcome. It's that time. It's your lunch hour. Thank you for taking the time to join us. 1700 ESPN, Mr. Credit. It is JJ in the house for Wise Wednesday, and we promise to make you wiser this Wednesday with our amazing panel in the studio. Yep, JJ in the hot seat. I will be running the show. And repeat offender, Rob Cunningham, Remax Pacific. How you doing, Rob?
I'm doing really well.
Good to have you in here, and thank you for taking time out of your day to join us. I know that you are a busy man, and time is precious, so we appreciate it, and our listeners appreciate it. Scott Criss from Eagle Home Loans.
How's it going?
I am doing well, and thank you for taking time out of your day, as I know that you must be busy as well in this real estate market that we're having. The good news about today is we have about 40 years of real estate experience in the studio today to help you make you wiser. And we will be talking about one hot topic, and that's selling your home. And why is right now the time to sell? We're going to bring you those 5 things a little bit later in the show. And if you're a buyer, if you're looking to refinance, and you have been going through that process, or you're going to start that process, Scott's going to touch on some credit issues that we see all the time and what they mean, maybe how to fix them, what you might be able to do, but how it's going to affect you in that process. And that's what we do here. That's what we do. We bring in the experts to make you smarter than everyone else. Do a quick market update and see some grain on that. I mean, it's pretty much a flat day. And this week is interesting because we're still waiting for news. We're still waiting for a jobs report to come out. ADP report came out today, and it moved the needle a little bit, but not much. What's interesting to me is the treasury markets have been in a sell-off mode the last, 5 days, right, Scott?
Yep.
What is going on with that, and how does that affect you out there listening, especially if you are looking to buy a home or possibly refinance? So here's what's going on. I mean, we have the treasury market. The Feds are obviously doing their share. They've backed off a little bit, but we saw a rally in the treasuries and a lot of money being pumped into the bond markets, which drove the yields down, and that also helps out mortgage rates. And, it's interesting. You have investment firms or just investors in these bonds that had certain, technical charts that they're looking at. And those charts went inverted on them. They were thinking yields were going to be going up, yields were going down, and they are on the exodus out of this investment means right now. Now, we'll see what happens in the coming days, but if you have been waiting on locking in your interest rate, you made the wrong choice. And when I'm on here, I tell you over and over again, pull the trigger, don't wait. Rates are not going to keep going lower. They're going to go up eventually, and you have seen that. So you've probably lost an 1/8 to 1/4% rate in the last 4 days. Scott, what are you seeing? I mean, as far as the borrowers out there, they see this information, right? The news gets released always a week late with the Freddie Mac report with interest rates, right? It's one of those things. Rates went down, to 4.125, or the national average is 4.116%, and that's 7 days late. That was the week prior, right? Yeah. It's always a week behind. So, from the consumer perspective, I mean, what do you see out there? I mean, people are they thinking rates are going to keep going down? Because that's what I hear.
Well, we saw since mid-April, mortgage-backed securities have been improving. We're in an upward trading channel, which means lower rates. And with the economic news that came out here recently over the last few working days, there has been a sell-off. And so I would say the smart consumers that are really following it on a daily basis, they did lock in. I had almost all of my clients lock in. Even my ARM clients decided to lock in because you have that inverted yield curve that's from the mortgage-backed securities, the 30-year fix, that's really pushing down the ARM rates, the start rates.
Yeah, the short term end of the curve.
Correct. So I think everybody sees that the rates are going up, but at the same time, you also kind of, if you're educated on it, you want to kind of play the market and lock in at the best time.
Yeah, well, and you always want to lock in at the best time. I mean, that's the thing. You always want to lock in. The problem is it's risk reward, right? You always have a risk reward scenario when it comes to interest rates. You can talk to whoever you're working with, and I'll tell you, they can't give you the answer for you. You have to make that decision for you. They can guide you. They can give you the information that's out there. But I'll tell you, your loan officer, they're your best friend if they get you to lock in and rates go up. And they're your enemy if they get you to lock in because of this statistical analysis and rates go down. So they are in a no-win position. You have to make an educated decision on your own and just pull the trigger. I mean, don't keep waiting. You have ADP report or the jobs report coming out Friday. If it comes in strong, who knows? Rates could continue the upward trend. I mean, we were at 3% on the 10-year yield not that long ago, and we could be there very, very quickly if things keep going in a positive direction. So I don't know. Did you guys hear about this story? The insider trading sort of story, and we have a local golfer, Phil Mickelson, Carl Icahn, and Billy Walker, I think his name is. I'm not looking at the story right now, but Details. I think those are the three guys. But it's a little insider trading sort of thing that I guess they've been looking at it for a while, and it's always interesting to me because if you do trade stocks, you may have friends that work at companies. You just might. And sometimes you get information, but as just a regular person out there, my thing is, how are we supposed to know what insider trading information is?
Sure.
That's the thing. So and not just this story, but we've seen Martha Stewart was involved in an insider trading. I mean, she actually got jail time, right? So it happens out there. And I'm just wondering, who should really get punished here? I mean, if it's really, at the end of the day, is it the information giver, the tipster that said, hey, you know what, Rob, I'm in this company, and let's say it's a pharmaceutical company, and we're working on a drug, and you've kind of, the drug's been working to get approved, and the stock's kind of been running its course, and you're making some profits, and he calls you and says, hey, you know what? And I got to tell you, we're not getting approval. If I were you, I would get out. Now, as a regular person, human nature, Rob, is going to tell you to push the sell button, right?
How could you not? You have been given information, whether the intent of the information giver was pure or not. You have the information. Are you supposed to look in the mirror and morally take the loss that is coming your way just on ethics? Or would that even register to you as a consumer? Would you even think, oh, wow, that's insider trading? I don't know that you would. Talk about a dilemma.
It is a personal dilemma. I mean, Scott, what's your feeling on this?
Oh, man, you're totally right. I mean, you want to do the right thing, and at the same time you have information, and it's like, do I just ignore it? Or, you're totally right. It is a major moral and ethical dilemma.
Well, and and the thing is, I mean, for me, I don't even know what technically insider trading is. I mean, I think that's, and maybe a Phil Mickelson, who has millions of dollars, obviously is probably entrenched in some, heavy financial advising and invested in companies, or possibly large blocks of stock in companies. I mean, maybe somebody like he knows and he's counseled in that fashion. But let me tell you, this can roll down to the common person. I have multiple friends that work for a company locally here. Mm-hmm. They went public, and they're in the accounting department. And he's made it very clear, hey, I can't give you any information that's not public information. Not that he even has the information, but the fact of the matter is I'm just a common guy. I'm not trading large blocks of stock by any means. So I just wonder when these things come to flight, who really should be getting punished? And I think, in all fairness, unless the recipient is really entrenched in the insider trading information on the way in and on the way out, just punish the tip giver. And maybe not even that. I mean, unless it's really affecting a mass majority of people. I mean, it's just a tough one. I hate to see these things, resources especially, getting wasted and money being spent investigating something for a long period of time, maybe without a conclusion.
That spending the resources to come up to no conclusion is a really good point that you make. And at the same time, if the recipient is taking this knowledge and running with it, knowing that they have been giving inside information, should they really be off the hook?
Right. Well, I don't know.
I mean, one of the biggest drawbacks of insider trading is it really hinders faith for the consumer within these markets. And their actions are continuing to cause the hindrance of faith, to muck up the free market that we're supposed to be living in. I don't know if I could let them off the hook. I don't know.
Yeah.
I wish I could just say, you know what, I'd have done the same thing. Move on with your life.
Maybe it's a dollar amount. Maybe it's a dollar amount that we're talking about, or maybe it's a number of shares or something like that you can target, because $50,000, let's face it, in a stock, it's not going to crash the company. It's not going to crash the market. $1 million in stock, that's a different story.
Sure.
People start seeing that sort of movement. So I don't know what it is. I think we need to relook at the insider trading schematic here. So I don't know if you guys saw this, but minimum wage talk has been the talk of the country. It's in California here. It's across the country. People want to make more money. I get it. Federal limits $7.25 right now. It's pretty low. I mean, minimum wage jobs are for a certain type of person that's looking for that work. But Seattle approved an increase to $15 for minimum wage. And, Seattle likes to be the place, and I've never been there. Here, it's a beautiful place. Starbucks is up there. And it's interesting, a lot of business owners up there are okay with it because they do feel there's a burger joint that says, hey, you know what? If people voted this, they're going to be okay paying a higher cost for their meal. Plain and simple, right? It's going to roll. It's got to be rolled somewhere.
Sure.
So I'm just wondering, let's localize this here in San Diego. We're going to be talking about housing today. We're going to be talking about real estate. You take a $7.25, or maybe it's an $8, I don't know what it is, $8.25 maybe in California, minimum wage. You take it up to $15 an hour. It's almost double. It positively affects people. So the argument could be, hey, there's going to be more cash out there to be spent, right?
Mm-hmm.
But then the business owners, you're paying more. There's more cost involved. We already live in a high-cost state as it is as a business owner.
Very.
Do you think this could have an adverse? Let's say it gets rolled out countrywide, nationwide, in California here. Do you think this could have an adverse effect on just even the real estate market locally in San Diego here?
It could have an adverse effect. It absolutely could. I don't know how much it would trickle into the real estate economy. I've heard both sides of the raising the minimum wage argument, and I think I have a good grasp on both of them. And my challenge and understanding is when you raise the minimum wage to a comfortable living level where you can work at McDonald's and say have a comfortable life, you've just taken away all that person's incentive and motivation to grow themselves personally, to get out there and find a better paying job or a new means to earn a living for themselves. So that's my trouble with it. At the same time, I also see that there are a lot of people who are on government assistance that are low paying, that are on minimum wage jobs as well. So who's paying? Is it going to be the government? Is it going to be the business owners? That this money is coming into the economy anyways. It's coming in the form of federal and state assistance. So it's not like we're going to be flooded with or consumers are going to be flooded with extra money. They already have the access to it. And so what we're looking at really is giving the teenagers who are working at the McDonald's in Poway twice the money that they are earning now. So we're going to see nicer cars on the Poway High School lot. And you know what else is going to happen is we're going to see more competition for these entry-level jobs.
Yes.
So the people that we're trying to help by introducing these laws, we're virtually pushing out of the marketplace and affecting the business owners negatively. I want everybody to have access to a great life, and I personally think we should all work together to do that. I don't know that just giving somebody more money for the same work is the answer to doing that.
Well, and I'm in agreement with you, Rob, and I think that was very well said. That was Rob Cunningham, RE/MAX Pacific, our real estate expert in the studio today. We also have Scott Criss in the studio today. When we come back, why is now the time to sell your home if you've been thinking about it? We will give you the reasons why. It's your lunch hour, 1700 ESPN.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the lunch hour with Mr. Credit. And today, it's Wise Wednesday on ESPN Radio 1700.
Welcome back. It's your lunch hour. Mr. Credit, JJ, Synergy One Lending in the house today, running the show. We have a great panel, 40 years experience in the real estate market. We have Rob Cunningham, RE/MAX Pacific, and Scott Criss, Eagle Home Mortgage. Why is now the time to sell your home? You know, the talk has been out there. It's now June 4th. We are 17 days away from officially summer starting, I think. That is correct. I'm not 100% sure, so don't quote me on that. But I think June 21st is the start of summer. And the summertime is supposed to be hot. So, you know, it feels like we've had 6 months of summer already in San Diego. I mean, the weather this year has been incredible. And with that, you know, I think we can all agree probably that the start of the year was a little bit slow in the real estate market. But then it picked up steam March, April, May. I mean, the numbers are the numbers. There's more sales out there. The inventory levels are what the inventory levels are. But, Rob, if somebody's been sitting on the sidelines, which we know a lot of people are.
Sure.
Okay. We know a lot of people are sitting there going, when do we sell? When do we sell? We hear this. We hear that. Why is now the time? So let's just start with number one here. How is the demand out there? I mean, what are you seeing out there?
I see that there's a strong demand for housing. We can go to the grocery store right now and find 3 people that are actively looking for a home together if we chose to. So there's virtually buyers everywhere. You know, that being said, there's about 5,000 homes for sale right now. You know, just 2 months ago, last time when I was on the show, there was 4,300 homes for sale. So We're seeing the amount of inventory rise. We're at a 3-month supply of homes where we were at a 2-month supply of homes 2 months ago. And, this is giving buyers more options.
Which is a good thing.
It is.
Which is a good thing. I mean, Scott, how's your pre-approval drawer looking? You know, I'm sure it's stacked with people that have been looking.
You know what? I think you have 2 types of people. You have the people that are serious and they want to get in. They understand how competitive they have to be. And I think with those people, we touch bases as a lender with the real estate agent, the listing agent side, and just say, hey, this is who I have, and they're serious. And those people, honestly, I've seen them get into houses a lot faster. But there's also the other people that are just saving out for the good deal. And unfortunately, on the buy side of things, those people, the housing market has improved as far as pricing goes, values go. And the people that are holding out for the good deal so far, you know, that those values haven't come down low enough for them to really jump in the market. And at this point in time, they're behind.
Yeah. And, I mean, Rob, we're still seeing multiple offers on homes, right?
Sometimes.
I mean, and that's the demand. I'm going to give you guys an example, and this is, you know, not in the area here.
Sure.
But, you know, we have to look at Southern California sometimes in general, and it kind of all feeds to each other. And this will blow your mind. San Dimas. So I don't even know if you guys know where San Dimas is, but famous movie, Fast Times at Ridgemont High, right? Wasn't that?
And I think Bill and Ted's Excellent Adventure.
Bill and Ted's Excellent. Okay, There we go. So that's San Dimas for you. So talk about a hot market. I mean, this is kind of out there. I mean, this is not San Diego. Okay,
Sure.
It's not coastal, but it's out there, and inventory levels are low. And I have some clients that are paying $36,000 over the appraised value. $36,000 over the $600,000 appraised value to get in the home. And multiple offers, just amazing. So, I do know if the house is right and you're looking at, if you have that special house and every seller feels like they do, it's your house, you feel like it's special, or make it special to drive those buyers, you're going to have the demand. So we talk about inventory levels going up.
In San Diego, they're rising.
Yeah, that's a good thing.
I think so. It's also not the case across the country. I'm involved with several mastermind groups. I'm talking to agents across the country. And we are, I think, a little bit ahead of the curve as we've always been in terms of what our market is doing, in that our inventory is growing a bit.
Okay, so right now, even though inventory is growing, some would say that's not a good time to sell, right? Why would I put my market on it if inventory is going up? But is the inventory level low enough at a 3-month supply to drive that good competition still between the?
Really good question. It's actually a very low inventory. Historically, a normal market, what they would consider an even, not a buyer or a seller's market, is a 6-month supply of homes for sale. Right now, we're sitting at a 3-month supply of homes. Why would you want to put your home on the market now instead of later? Well, do you want to be competing with a 3-month supply of homes or with a 6-month supply of homes later on the road?
Well, and I think that is what I love, because, that's Rob Cunningham, Remax Pacific. I'm going to give you his number right now. Just take it down, give it to somebody who needs it. 619-804-5972. It's 619-804-5972. Rob Cunningham, Remax Pacific. We bring the experts in to give you the real deal, because you hear inventory levels going up, but we're at a half the supply time that a normalized market would be in. That is a reason to put your house on right now. Don't wait. That's what happened last year. This is exactly what happened last year. Mm-hmm. The market was hot. People kept waiting for it to get hotter. Then we got to the fall, and the market slowed down. Right. And people are going, why isn't my home selling? I don't know why my home's not selling. So how about the processes? You put your house on the market right now. It's getting into summer. How is that going to look like as a seller?
Well, we put as more properties come on the market, you can expect a longer market time. So the sooner, before you come on with more competing homes, the sooner you do it, the faster you can look to sell. When there's more properties on the market, the idea is that it will also draw in more buyers. And you guys very well know, being in the lending industry, when there's more applications and more processes running through banks, what's that do to turn times on the loans? So it will actually draw the process out in that manner as well.
So you want to get your house on now to have that smoother, faster process.
And if you're considering buying another home, which most people are who are selling their home, do you want to be a buyer when there's more homes to choose from, or do you want to be looking to sell them?
Right. That's exactly right. And let's talk about move-up. Are you seeing the move-up buyer happening right now?
The move-up buyer is the best person to be. You're able to capture more equity as the market continues to appreciate. The trouble that the move-up buyer is having the faith to take the next step to sell their home. Oftentimes I meet people and they are at a loss of what's going to happen. We don't know where you're going to go, really. And it just takes having that faith and sometimes a contingency plan to make that happen. And trust me, it's worth it every time. It's tough to see if you're not going through it every day. But in my position, we're seeing people only having to move once. You simultaneously closing more often than having to move twice. It takes a bit of faith, and it takes commitment from yourself and your agent, but you will be so much better off. You'll be in the house you want to be in. You'll be capturing more equity. Your life will be better. Your wife will be nicer to you.
I like that. Okay. I'm glad my wife is not listening right now, because I would be looking at a house probably tomorrow if that were the case. And let's talk about this. Let's say you've been underwater. You just don't know what to do. You're close to equity position getting out. Maybe it's a short sale. Maybe it's that edge, or maybe you're looking at downsizing, retirement. Why would now be the time?
It's time to move on with your life. How long has this been a headache? How long have you been considering moving with your to Arizona to be with your grandkids? How long have you been considering cashing out your equity and opening up the business in the next town that you are actually thinking of going to? Right now, you have the opportunity to make those changes, to move. I don't know why you'd wait. What are you going to continue to wait for? If the deal works for you now and we can make it happen, which we more than likely can, take advantage of it. What are you waiting for?
Well, sometimes you need that kick in the rear end to kind of get it going. That's Rob Cunningham, Remax Pacific, 619-804-5972. When we come back, I know it's back out there. I know it is. I hear about it. I don't like it. For sale by owners. It's your lunch hour, 1700 ESPN.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Wise Wednesday on ESPN Radio 1700.
Welcome back. It's your Lunch Hour. JJ, Synergy One Lending, running the show today. Great panel in the studio today. Scott Criss, Eagle Home Mortgage, Rob Cunningham, Remax Pacific. And we are making you wiser this Wednesday. Because it is Wise Wednesday. So, Rob, this is disturbing to me, and I want to touch on this real fast. For sale by owners, I see it coming up more and more, and I don't like it. I don't like it because I don't think the consumers understand the ramifications of selling their house on their own.
Mm-hmm.
And you brought to my attention a couple websites that are out there, and let's talk about these.
Yeah, let's go ahead and talk about them. And there's actually something that's really funny and ironic about them. For example, buyowner.com. It's a website where for sale by owners can go and list their home and potentially save the commission is what they're ultimately out to do. Well, just recently, Al Bonati, the longtime chief executive of this website, he's actually chosen to list his home with a local real estate agent.
Nice.
That's out in Florida. And this is... This article comes from the Herald Tribune, a local Florida newspaper. You may remember that 2 years, or actually even longer than that, 3 years ago in 2011, the CEO of ForSaleByOwner.com, his name was Colby, he actually ended up listing his home, his Manhattan apartment, with a real estate agent as well, and sold for a fair amount more money. If you just Google ForSaleByOwner.com owner listing with an agent, you'll see all these articles coming up just showing the irony of it. So the people who are making millions off the For Sale by Owner websites are actually choosing to list their home with real estate agents. Interesting, isn't it?
It is very interesting.
From my perspective as a real estate agent, and I do prospect a lot for sale by owners. In fact, it's the main stake of my business is converting people and ultimately earning their listing. I've come to believe over the years that I have a value-added service. I more than pay for myself every time by getting more exposure, by finding the highest and willing buyer, by negotiating the contract through and through, and by being there for you till the end of the transaction and after the transaction. I mean, if you talk to any of my clients, and I can give you numbers to call if you're interested, they'll tell you Rob's going to go to war for you. He's here for you anytime. You call him at 9 o'clock. He'll call you back.
Who knows what stage he'll be in? No, I'm just kidding, Rob.
Oh, are you?
Yeah. Well, and the thing is, with all that being said, I mean, statistics will show us that by hiring a professional realtor to sell your home, it's going to pay for itself regardless. I mean, the statistics will show you're going to sell your home for more money. It's across the board. It's hands down. It's proven. You have the insurance behind you. You have the professionalism behind you. You have the more buyers. This is what they do for a living. So don't sell your home on your own. You don't need to do that anymore. You don't even need to think about it. If you need to, just reach out to me, and I'll put you in touch with Rob. I'll put you in touch with Scott today, who's in the house. Just go to www.askjjnow.com. All my information is there. You can always email us at email@mrcredit.org. We'll put you in touch with our guests. So I want to cross the board here. We've been talking about selling the home. We know now is the time to sell the house. So you're buying the house. You're on the opposite side of the coin. And we haven't talked about this for a long time, Scott. So I'm really glad we're going to talk about it. But credit reports, there's so much information out there, and people think what they, I can't tell you how many people I talk to. You probably do the same thing. You say, hey, you have any idea what your credit is? What is it looking like? Oh, it's 900. It's perfect. I don't have any debt. You run the credit report, and there's all sorts of surprises on there, and it just never fails. It just never fails. So I want to talk. We have 4 hot topics here, which are huge when it comes to the credit. And number 1, accounts in dispute. Scott, can you tell me why this can hurt somebody?
Well, before, it wasn't a big issue, and as of recent, they've when I say they, I'm talking Freddie Mac, Fannie Mae have come in and said, when our AUS system, automated underwriting system, is reading your credit report, it's not taking into account anything that's currently in dispute. And as of recent, before we could kind of get away with it, as of recent, any items that are in dispute or any serious items in dispute, that dispute needs to be removed, and it needs to be reran through the automated system. So a short story, I had a case come through the other day, and we pre-approved him. I said, hey, you got disputes on here. Now, there's a couple ways to get it off. You can either go to the bureau level, Equifax, TransUnion, Experian, and say, hey, we no longer want to dispute this item. But that can take up to 30 days, right? So I said, I want you to work on this now. Well, they worked on it because I said, as of now, it's going to have an impact on what you get approved for. Well, they started working on it, but didn't quite finish it. And they wrote an offer, got it accepted. So now they're in escrow. And so I said, okay, listen, we don't have time to wait. Let's go ahead and I'm going to pay for some rapid rescores for you. And if you're familiar with rapid rescores, where as a lender, we can actually have them not quite so rapidly, but about a week and a half, right? Have certain items on the credit report updated at the bureau level. Well, the problem is we ended up having to go through a couple different runs. And so, which was about a week and a half apiece. Well, we're now 3 weeks into the escrow. Now, by the time the disputed items were completely taken off from all 3 bureaus, from all their accounts, their credit score went down. Okay, but that was okay. Our credit score still met requirements. In your situation,
it was okay.
It was okay in our situation.
Okay.
But it won't always be okay, depending on how many items are disputed and which items with which bureaus are disputed. So by the time we got all of them off of there, reran it through the Freddie Mac, Fannie Mae automated underwriting system, both systems approved them not at 100% VA financing, but I had to lower my loan to value to 95% to get it approved. So this was a last minute, not so surprise, right? I mean, It was warned.
Yes.
But I would say one thing that consumers have to look at as far as when we're going through credit cleaning companies and going through places to get our credit cleaned up, it's a good idea to take a look at the credit report. Maybe a month, especially if you're in that situation, before you really start planning on writing offers. That way you can say, okay, what's in dispute? What do I need to get out of dispute to make sure that the data that the lender is giving me is going to be valid?
Yeah, definitely. And just to clarify this is Scott Criss, our mortgage expert in the studio today, Eagle Home Mortgage. What are you saying? I mean, when you dispute an account, let's say a balance shows up, you don't like it, you call the credit bureaus, you dispute the account. When we're looking at it from a lender perspective, that account is not calculated in the score. It's not calculated in the scenario. So when we undispute the account, now all of a sudden that account is calculated into the scoring mechanism. So very commonly your score can drop, especially if it's an account that had something bad. Maybe there's late payments on that account.
How often do you dispute an account that's good,
right? Yeah, usually it's a negative account to start with, and it causes tons of problems. So really think about it. Before you dispute something, number one, talk to, and you're in that process of looking at buying a home, don't just go and dispute everything. I mean, And the problem is you see credit reports with 10, 15 things disputed. I mean, everything's disputed, right? They just disputed at the whole world. Well, it takes time. It costs money to get those things taken, if it's fixed and taken out of dispute. Or if you went to a credit cleaning agency where all they do is dispute everything. So be very careful about that. The rapid rescore takes time. We hear about the rapid rescore. As Scott says, it takes time. The lender's it's expensive. It's expensive. The lender's not always going to pick up the tab for that. Don't expect your lender to just pay for that. Expect to pay for it because it's expensive. I mean, you're talking about $30 to $50 per trade line per account. You have a couple accounts, you're talking $300 potentially just to get that rescore done, and a couple weeks to get it done. So let's talk about this. I mean, a lot of people have gone through short sale processes in the past. You know what? Let's hold on to this because this is really important. We know a lot of people have gone through short sales, and I want to talk about how those are reporting on credit when we come back. It's your lunch hour, 1700 ESPN, Mr. Credit.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the lunch hour with Mr. Credit. And today, it's Wise Wednesday on ESPN Radio 1700.
Welcome back. It is your lunch hour. It's JJ Synergy One lending in the studio. Today we have Rob Cunningham, Remax Pacific, and Scott Criss, Eagle Home Mortgage. Before the break, we were talking about credit issues if you are a buyer. And this also pertains if you're looking to refinance, how accounts in dispute can affect you adversely and rapid rescoring, how that kind of works. But we were also talking about automated underwriting engines, Fannie Mae's system, Freddie Mac's system. Just to kind of give you a quick lesson, these are automated systems that are built by these agencies who purchase the loans from the banks. Now, lenders need to run your scenario through these automated underwriting engines. Isn't it nice that a computer is sort of deciding your fate for you? But that is, you know what? I mean, in time, that's just the way it's going to be, and that's how it is right now. So one thing that I see a ton of, and Scott, I know you do too, is a lot of people have gone through short sales. We know that, Rob. I'm sure you've represented people. You've been through that process, and it's time for them to rebuy. They've been in the penalty box, and now they're back. They're ready. They got the down payments. The time has passed. They want to be homeowners again. You run their credit, and what happens?
Okay, so a lot of times what ends up happening with a short sale is initially when short sales became relevant, the listing agent said, hey, you had to be at least late on one payment, otherwise the bank won't look at you, right? So what ended up happening is whoever the lender was, they started saying, okay, now they're 30 days late, now they're 60 days late, and it's going on your credit while you're going through your short sale, right? And then pretty soon foreclosure proceedings started. You'll see that on a lot. And then, of course, you short sold your home. You didn't foreclose on it. And hey, your hands are clean and, you're on the bench for a while, right? So fast forward, now you're ready to get into a house. Well, most people start saying, okay, well, let's go start looking at houses. Well, especially a scenario like this, let's really start taking a look at the credit and see how the automated underwriting system is really reading it. What we're seeing pretty common right now, and we work with a lot of short sale clients, the automated underwriting system does not always read that short sale, even though it's shown paid in full, zero balance, it's still thinking it is a foreclosure. Now, long story short, long time ago, I did a pre-approval for some people, and I did the pre-approval based on a manual underwrite. Now, these aren't too common. Generally, a lot of brokers, a lot of places can't really do them because it's kind of a Fannie Freddie direct thing, right?
So people don't want to do manual underwrites anymore.
No, they're risky. Your underwriter, the person that's putting their neck on the line. I mean, it's a big deal. And if Freddie Fannie doesn't buy it, then someone might lose their job.
On the hook.
You got it. So what we've seen is when we run this through the automated underwriting system, that kind of kicks it back. So we had a borrower, it kicked it back. Okay, I said, okay, well, it's false. I have all the documentation here proving it was a short sale. And so I said, you know what, let's do a manual underwrite. So I went ahead and pre-approved him with a manual underwrite. Now, he wrote an offer on a house, and the house, the listing agent said, okay, well, I want you cross-qualified through my lender. So I got in contact with the lender, right? Just saying, hey, this is the situation. He was like, oh, and he knew me. He was like, oh, hey, Scott, how's it going? Da, 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 da. He's like, hey, just send me over the 1003 AUS and the credit. Dude, I know you're good. Like, don't worry about it. I said, well, I can get you the credit in the 1003, the application, but I can't get you an AUS. He's like, well, I don't understand. I said, well, it's reading the foreclosure wrong. We have to do a manual. And he's like, no. People don't really do that. And I said, no, we do. I swear to God. I I need you to endorse this. He said, Scott, get me a full underwriter approval and I'll do it. He said, because I have 3 deals going on right now. And I've been working on the credit bureaus to try to get this to read properly. And it's been a nightmare. Seriously, a month, 2 months has gone by and we're still in the same spot. So I said, hey, listen, if I can get you underwriter approval in 2 days, A, I want you to clear me with the listing agent. But B, man, I'd really love your referrals.
Give me those 3 deals.
So, he laughed and he was like, okay, that's fine. And, he's, he was a branch manager at a very, very well-respected mortgage bank here in town. And so anyway, I pulled it off, right? Yeah. I said, here you go. So he approved it. We got we got our offer accepted. So things went well there. And then I was like, hey, so turns out one of them was his.
Nice.
And so we were able to do it under a manual underwrite and get it approved. Now, what we started running into is high balance does not allow for manual underwrites.
Right. Now, high balance is, specifically loans in San Diego County here. We're in a high cost area, 417 to 546, 250 before the jumbo loan limit. That's the high balance. It's underwritten differently than your regular conforming loan limits, 417 and under. They're sold differently to Fannie Mae, Freddie Mac. So that's where you run into the issues.
That's correct. Yeah. And we could no longer do the manual underwrite. So that was kind of our fix-all. So we had to really go back and learn how to do the rapid rescores and get the credit cleaned up. For us, it was a lot of money being left on the table with a lot of clients that needed to get into a better financial position.
Yeah.
So
and this is the key. I mean, what we're talking about here is credit. Before you go through that process of calling and looking at homes, you got to go through the steps. You got to get pre-approved. That entails running a real credit report, because I'll tell you, if you're associated with one of these little agencies and you're getting your score and it tells you it's a 780, it may not be accurate. You're not seeing the information that we need to see. We need to run it through your automated underwriting engine. That was Scott Criss, Eagle Home Mortgage. If you need to get in touch with anybody today, just email us here at email@mrcredit.org. We'll put you in touch with Rob Cunningham, Scott Criss. I got to go to the Mr. Credit inbox, guys. I have a question that fits right into something we talked about today. Any questions that you have, just email us, email@mrcredit.org. We'll get them on air. JJ, I'm in a bind. This is from Peter S. I'm in a bind. I know it is the right time to sell my house. I've gained enough equity to get out of my house and not be upside down, and I have a down payment saved up for the next house. Congratulations, Peter. I am needing more space with my kids and another one on the way, but feel like if I do put my house up for sale, where am I going to go if I can't find something? I do not want to be living in a hotel for months if I get stuck. What would you suggest here? Now, Rob, we were talking about this a little bit earlier. That's Rob Cunningham, Remax Pacific. How do you get Peter to feel comfortable with this process?
You want me to give you the short answer or the long answer?
I want you to give me the answer that's going to help Peter.
Peter, we'll find you a house. You'll be fine.
That's the short answer.
That's the answer. Have faith. We're going to find you a place you're not going to be living in a hotel for months, unless you have some grandiose expectations, which we're going to address up front before we even begin this process.
Well, and I think that's a good statement that you make there. Expectations, right?
Right.
When expectations don't meet reality, that's where we have problems. And so, Peter, if you are feeling like you need this 5-bedroom, 4-bath home on the water in, let's say, Coronado, and you have a $500,000 budget to move up, your expectation's not going to meet reality here. And Rob's not going to be able to find you that house.
Right.
But that's why you plan this thing ahead of time. You see what's out there, right? You see what you need, see what the needs are of the client, and you fill that need. And you don't need to be afraid to sell before you buy. Another question for you. And this fits right in. It's amazing. These are fitting right into what we're discussing today. This is from Matthew. JJ, thanks for filling in for Mr. Credit. You are welcome, Matthew. Always glad to do so. I know that you have talked about needing an agent to sell my house, but recently I was approached by someone that works with iPay1, and they can list my house for 1% total commission. It seems totally legit. Didn't they used to have their name on the sports arena? They must be a good company. What am I missing here?
I'll dive right into it. Their company name should be iPay4, because you're still going to be having to offer out a full commission to a buyer's agent. You're going to have to be offering out a full commission to a professional to negotiate against you. Matthew, I have a question for you. Do you have a discount home? Are you looking to discount the price of your home? If not, then why would you choose a professional whose value that they provide is discounting? Look, if they can't stand up to you or the marketplace regarding their own worth, how strong can they possibly be in defending you and the price you set on your home?
Plain and simple. Well said.
Thank
That's
you.
Rob Cunningham, RE/MAX Pacific. And, Matthew, we talked about it earlier. If you were listening or you weren't listening, you don't need to go down the path of for sale by owner. You don't need to go down the path of discounting the commissions, because you're going to sell your home for more than you normally would if you go down that path. So it pays for itself. Get the top dollar for your house. Work with a professional that knows what they're doing, like Rob Cunningham. I'm going to give you his number right now, 619-804-5972. We have Scott Criss, Eagle Home Mortgage. If you want to get in touch with Scott, 619-929-0102. Anytime, email us at email@mrcredit.org. We'll put you in touch with anybody that's on the show. Thank you for joining us today. Rob, thank you for joining us today, taking time out of your day.
Thanks for having me.
Scott, thank you. First timer.
Hey,
Appreciate
thank you.
it. Appreciate it. We made you wiser this Wednesday. I know we did. Thank you for joining us, 1700 ESPN, your lunch hour.
If you would like to contact Mr. Credit or access any free offers mentioned on the show, just go to mrcredit.org. That's mrcredit.org.